Thor Explorations is a West African-focused gold producer. It's listed on both the Toronto Venture Exchange and here in London on the AIM markets. It's just produced the numbers for the first half, and we've got some decent drill results as well coming through from one of its operations, Duata. Stephen Lawson is chief executive. He joins us now on the line. Stephen, you're a busy man, and like me, very busy makes it difficult to pin you down. But when we do get to you, there's a lot of questions to ask about this really exciting project, which is developing so well. I mean, you're producing gold now at your gold production of, what, 23,000 ounces, I think you had in the first half this year. And we'll take a look at this in comparison to the size of the company in just a few moments' time. But what can you tell us about what we should know about the second quarter and first half numbers that we've seen recently? What excites you?
Yeah, so we, first of all, thanks for having me on the call again on your show. We did 23,000 ounces in the second quarter, and which was up from around about 21,000 ounces in the first quarter. So around about 44,000 ounces for the half. We're very happy with that. You know, we always knew, if you look at the mine plan, the feasibility study, this was always going to be the most difficult year, because the ore body plunges to the south, and we were going into an area of high strip where we were mining a lot of waste. So to come out of the in the second half at these numbers, you know, we're very happy with. We have seen, you know, the continuation of this high strip through August. However, we're glad to say, you know, we're coming out of it now, and we believe we will be within our guidance at the lower end, but we will be within our guidance for the year, and that's a very that's an achievement we're very content with internally.
Yeah, clearly you're getting income coming through. That's obvious, and we can see that here. Are you now fully funded for all of your plans for drill campaigns and further work you're doing on areas of the business where you're not getting an income?
Yes, we're completely self-funded now. We're generating cash flow. We're generating free cash flow. We've had profitable quarters after 2 profitable quarters this year after a profitable year last year. We're able to fund our exploration program in Nigeria, which is beginning to come up with results. We're able to fund our exploration program in Senegal, the Duata project, which is targeting a preliminary feasibility study at the end of the year. And we're also able to fund the initial exploration program we've designed for our lithium venture in Nigeria.
Yeah, let's pick up on lithium in just a moment's time. Just want to quickly return to the Duata project, as you say. These recent drill results, what's come through there that gives you hope?
Look, we're very happy with these drill results. You know, we had an updated resource estimate, which was total of 1.78 million ounces. And we designed a drill program of 15,000 meters to hopefully increase the grade and hopefully increase the tonnage to try to get to that 2 million ounce mark. You can see from these drill results, they're extremely encouraging. We had 3 meters at 23 grams per ton, very high grade. We had a number of intersections, you know, 16 meters wide, 18 meters wide, 13 meters wide, all going, you know, 4 grams, 2 grams, 4.5 grams per ton. And what that does demonstrate is that, you know, there is certainly upside in the inferred category, which we're looking to convert to indicated, but also should hopefully uplift the grade of the global resource as well. So yeah, we're extremely happy by these results. We have more results to come in over the course of the next month as well.
Just remind us as well what it's costing you to lift an ounce of gold at the moment out of the existing projects where you've got production underway. And does that will that change very much when Duata comes online, for example?
Yeah, look, in Nigeria, we're in a high strip phase. We're producing gold that's about $1,300 per ounce. We had a quarter this year, all-in sustaining cost of $1,250 per ounce. We expect that cost to go down next year once we've pushed back this high strip area and to be closer to that $1,000 per ounce mark. With Duata, look, we are still early stage. It's harder to tell, but the first look at the economics is going to be with our preliminary feasibility study, which we hope to get out in December. So that's the first time we're going to understand the costs, you know, from the back of an envelope, internal perspective. we're happy with how it looks so far. You know, we have a relatively shallow deposit. It's wide. The grade is lower than what we have in Nigeria, but it certainly looks mineable.
Yeah. Let me talk about what we've been talking about in the context of the value of the company. I want to show share price first of all, because I think it's worth looking at the share price we got at the moment, 18.5 pence. This, on my calculations, gives your company a valuation here in the London markets for £110 million. Now, you're lifting out 20,000 plus ounces a quarter, and you've got a fairly beefy return per ounce. Look, okay, you're not in perhaps maybe the premier gold locations around the world. There is obviously a little bit of political risk, and I'll let you talk about that. But why is there this discount and the value of the business compared to what it is you're doing? I mean, you've been in the business, 11 years now, haven't you? So you've probably got a pretty good, well, you know, you may be ripping your hair out about all this. I guess it's a question of just how the market interprets things.
Yeah, look, the share price is a source of frustration at the moment. You know, we can't deny that. But what I can say is, you know, we're delivering in terms of profitability. We may be discounted because of our 5-year mine life as opposed to a 10-year mine life. We may be discounted because of perceived jurisdiction risk. To counter those 2 points, I would say we're in a politically stable jurisdiction that hasn't had a political coup since 1984. The largest economy in Africa, sophisticated economy. So I don't think there's a huge amount of risk there. And I think with the mine life, we never had the luxury of having a war chest of a treasury to carry out significant exploration. This is the first year we've actually been able to do this at a step up from what we've previously done. And we're beginning to get results from that. So we're confident we can extend the mine life. I think once we start demonstrating that to the market, the share price will re-rate. And lastly, I would like to probably point out that you say I've been in this for 11 years. I've actually been CEO of Thor for 12 years. I got a LinkedIn reminder the other day.
Okay.
And there are a number of long-term legacy shareholders that have come in at, you know, 7.5 cents, 10 cents, 11.5 cents fundraisings. So at this share price, you know, 30 cents, which is 18.5 pence, it's a good opportunity for them to exit, which is probably what the resistance is at 18.5p.
Yeah. Let me just quickly go back to the share price again. You're right. Obviously listed in both jurisdictions. I want to show you the Canadian. There's 32 cents. You're right. Obviously people have got a lot of profit in the bag already. Yeah. Let's return to the London share prices. As we were saying before I went to air, I love looking at levels, and I'm tempted to ask you about this 18.5 pence as to where we are, because it has been resistance so many times. It has been support a few times in the last year or so. What is it about this level where we're at the moment, giving you a valuation of what, 210 million Canadian dollars, 110 sterling?
Yeah, look, I wouldn't know about the level per se, but what I can say is, you know, these long-term shareholders, this is a good opportunity for them to exit a very profitable level. And, you know, for the shareholders going forward, you know, it's all I can say is, you know, it's only a matter of time before all those shares are sold and that new levels of support are created. So from our perspective, what we believe we need to do is continue performing, continue delivering our operations profitably, continue with exploration success, deliver in Senegal an economically robust feasibility study from Duata, and then also give our shareholders the optionality, the exposure to optionality with our lithium venture. So from where I'm sitting, we think there's a very positive outlook in terms of the possibility of re-rating the share price.
Yeah, let's pick up on that point now about lithium, because obviously it is an important part. We're talking more and more about lithium at the moment with our guests and its uses and so forth. How far down the road are you with this prospect at the moment? Update us on progress.
Yeah, look, after putting this initial land package together of 600 square kilometers, we've kicked out early stage exploration across our two top priority projects, should I say, one in Oyo State, one in Ekiti State. In Oyo State, we've actually kicked off a drilling program, a 5,000-meter initial drill program. We press released some of the results there a couple of weeks ago, and we are very excited by the start we had there. You know, drilling 11 meters wide at 2.6%, 9 meters at 2.4%, 11 meters 1.53%. So this is very high grade spodumene. It's the right stuff. That was the first pegmatite we drilled. We're now drilling the other pegmatites around us. If they're mineralized to this extent, we certainly have a very exciting venture here. So we should have more results being given out to the market through the course of September. And based on those results, if they're anything like the initial results, we'll be looking to expand our ongoing drilling program.
And the cost of that, are they also, the cost there being covered by your gold production, or are you dealing with this as a completely separate entity where you'll be borrowing money to pay for this particular asset?
No, this is a separate entity. It's a completely ring-fenced, wholly owned subsidiary. However, we are able to fund the exploration from the cash flow generated by our gold production.
Okay, look, we wish you luck, and that some of what you wish for comes to pass, because clearly this is a company which is moving in the right direction. It's just a question of people being more appreciative. One final question has to be, where are you going to be by the end of the year? It's closing in fast. I can't believe how, certainly in the Northern Hemisphere at least, how quickly it's getting dark in the evening. What are your thoughts on the last 2, 3, 4 months of the year?
Yeah, look, there's a lot of news flow coming from Thor in the next few months. Let's start with our operations. You know, we have a target of 85,000 ounces for the year. We expect it to be another profitable year. We have exploration going on in Nigeria on the gold side. We want to start updating the market with encouraging exploration results. So I think those two points are extremely important to us. Segilola is our cash cow. And it's the core of the business. Secondly, we have a business in Senegal, which I don't believe is priced into our share price, which it's almost 2 million ounces. If it was in any other junior company as a flagship asset, it would have a material market cap compared to what we're trading at. So I think having our preliminary feasibility study out gives the opportunity for investors and prospective investors to see what a valuable asset this is, and an asset which can deliver significant value to shareholders over the next few years. And lastly, we're going to be delivering news from our lithium venture on an ongoing basis throughout the year. And this is real optionality for a significant upside here. The demand-supply gap in lithium, I don't have to emphasize. This is very high-grade lithium. Pegmatites we've been drilling so far. If that continues, we could be onto something that's completely transformational for the company.
Yeah, look, you made your case. Thanks indeed for joining us. It's been a pleasure. I must insist that you pass by the studio at some point so we can meet you face to face.
I will. We'll organize it. And next time I'm in London, I certainly will.
Lovely. Okay, Segan, thanks indeed for your time. It's been a pleasure.
Thank you.
Segan Lawson, he's Chief Executive of Thor Explorations.